Hey guys, welcome back to the channel. Today is the day that I'm going to pick a random stock. I don't know what stock it's going to be. I'm using a random generator for the stock market. It's just going to pick out a random symbol, and we're going to go through it and analyze it really quick. So, without further ado, let's find out what stock that we're going to be analyzing today, because I have no idea what it's going to be. So first thing that we're going to do is let's just go ahead and say New York Stock Exchange and I don't know, technology industry. Great. Select a random stock from the technology industry on the New York Stock Exchange. Came up with Nokia, symbol NOK. All right, so let's go ahead and put that in. Gather some data about Nokia. And here we go. All right, so currently trading at $4.72 per share. Yahoo Finance thinks that it's overvalued. I'll be the judge of that. Analysts, let's see. Analysts are expecting next 5 years growth of 14%. We'll go ahead and use that in our fair value calculation. 14%. We'll expect a 15% rate of return, and what it looks like is that we are getting about 26 cents per share in free cash flow. That gives us a total fair value estimate of $3.89, which is significantly above the current price of the stock, but let's go ahead and continue analyzing that anyway. Expecting let's see, return on invested capital. It's been choppy at best, and low single digits. Not a big fan. Hovering right around zero, guys. It's not great. Return on equity also not great. Hovering right around zero. Historically, that's not looking good. Let's take a look and see what is going on with Nokia in terms of its assets and liabilities. My guess is that long-term debt has been increasing. So total assets on hand remained more or less constant. Long-term debt actually holding its own, pretty stable. How about liabilities, which could include things like leases and things like that? Also very stable. All right, well, at least it's not doing much. It's basically just maintaining. Shares outstanding. Are they funding things by diluting you? And there was some pretty decent dilution in 2016. Nothing really to speak of since then. So let me give you my take on Nokia, just from what I'm seeing in this stock. The things that I've seen so far, probably not a buy. It looks like it's overpriced, for one thing. For a second thing, there's no returns. There's not a lot of joy in this company, and I think that's probably being reflected in the share price. It seems like this company is not being run for the shareholders, or at least it's not winning for the shareholders. It looks like this company is being run just to maintain it. This looks very much like a zombie company. It's not doing much of anything at all. It's not earning any money. It's not losing any money to really speak of. It's just sort of maintaining. And that doesn't sound like a very exciting investment to me. So for me, Nokia gets a thumbs down. All right, guys, that's all that I got. Quick and easy. Let me know what you think.